Hello and good morning, everyone. Thank you for joining this week's ATRAM webinar series. I'm Santi Alizalde, Business Development Officer at ATRAM. The global pandemic has undoubtedly created what we now call a new normal. Throughout quarantine, a part of this normal has meant less face-to-face hangouts with friends, less meetings with clients, and unfortunately, even less time with our loved ones. However, despite all this, one thing definitely has brought us much closer together. And that thing is technology. It has been able to change the way we live, the way we work in this current climate. As more and more people use technology in their daily lives, this brings to light some questions as to how clients can invest in and own some of the hottest technology companies in the market. So in this morning's episode, we plan on taking a closer look at one of ATRAM's top performing strategies in the market today, the ATRAM Global Technology Feeder Fund. To help me with this, I'll be welcoming Mr. David Gozali, ATRAM's multi-asset analyst. However, before we begin, I'd like to remind our viewers that you can submit questions throughout the discussion by clicking on the Q&A buttons on your screen. We will get to as many of them as we can at the end of the discussion. Additionally, I'd like to let you know that this webinar will be recorded and that copies will be disseminated within the day as well as posted on all our social media pages. Please make sure to keep your eyes on the webinar as we will be wrapping up with a quick survey at the end. All right, now let me introduce David Gozali, ATRAM's multi-asset analyst. Hi, David.
Hi, Santi. It's a pleasure to be here.
Thank you for joining us this morning. We definitely appreciate you taking the time. To kick things off, let's start with a background on the global technology space. What can you tell us about how the industry has changed over time?
Sure, Santi. Let's take a step back and look at the top 10 largest companies at different times. The white bars are the energy companies. The blue ones are the tech, and the gray are other sectors. On the left-hand side, we look 10 years back, and we can see that energy firms ruled. 4 out of the 10 belong to energy, while only 2 belong to tech. Fast forward to present day, and on the right-hand side, we can see that 7 out of the 10 are tech companies. The point I want to make is that many of these tech companies dominate. They're now among the biggest companies in such a short time. And the reason behind this is disruption. Many industries and even our personal lives have been disrupted by technology. The way we listen to music has changed. From CDs, I now stream on Spotify. Our mode of reading has evolved. So I used to read paperbacks, now Apple iPads. Instead of shopping in malls, we shop online on Shopee, Lazada, or Amazon and pay with online banking. Even how we moved around has changed, from our own driving to Teslas and other self-driving electronic vehicles. Technology has permeated through all industries and in our lives and have become a big part of our lives. But the thing is, this will only continue to disrupt our lives. So now today, I want to show you a way. Instead of being left behind, why not invest and be a part of the growth? As we move on to the next slide, I want to show you how markets have changed. On the left-hand side, we have the old classification, split into technology and consumer discretionary. However, industries are changing, and we see a convergence in telecommunications, media, and internet companies. The global classification house, S&P, or Standard & Poor's, recognized the change happening. And on September 28, they created and rearranged categories. Companies like Alphabet, also known as Google, Facebook, and Netflix have been taken out of their old categories and placed into a new one called communication services. I also want to highlight this because passive investing, such as buying into an ETF, might not be enough anymore in tech. If you bought an information technology ETF, yes, you may have exposure to Apple and Microsoft, but you would not get exposure to the Alphabets and Amazons of the world. With that said, I would like to give you a better perspective on global tech. Next slide, please. Now, what do we mean by global technology? I think the best way to explain is using an example. So to a normal person, when I explain to my parents and my sisters and my brother, tech is usually the computer and the website, maybe the iPhone, right? But in reality, it's much more than that. You have the chip designer based in the UK. You have the manufacturing of the chip based in Taiwan. You have the computer being made in Korea. You search using a Chinese website and you pay using American payment system. You see, tech is a spectrum of subsectors. And to reach the end product, you actually have linkages from emerging and developed markets, hence global. Investing in global tech provides you not only with the opportunity, but also with diversification. Now, I hope this provides a good introduction to tech and how it has changed our lives, Santi.
Definitely, David. Thank you for that. So you've shown that the industry is always changing, which in reality, I believe, is an opportunity that investors can take advantage of. So that brings me to my next question, one that I think speaks for a lot of our viewers here today. Is now a good time to invest in technology? And more specifically, is it too expensive or have I missed the run?
I think that is a great question, Santi. And to answer you directly, I think no. I don't think it's too late. As part of the multi-asset investment team of ATRAM, we like global tech. However, more than just a good story and fundamentals, we look at other factors such as performance, valuations, and earnings. And those are the three things I want to talk about today. So on my next slide, I show you performance. And what I did to make it not biased as compared to how others might do it is I compared both long-term and short-term. On the left-hand side, we have 5-year performance of the tech sector, as seen by the white line. And I compare it against the broad global markets, as seen by the red line. What we see is tech continues to outperform the broad market more than 3 times even in the past 5 years. Now, let's take it to the extreme, right? I don't want to sugarcoat anything. Everyone knows what happened in the mid to late February. Markets took a really big hit. Now, what I want to show is tech not only did not fall as low, but also recovered much quicker than the broad markets. So if you invested in tech the day before one of the worst sell-offs in history, let's assume the worst, you would have already recovered and be in positive territory right now. Now, performance is great, but what about valuations? Next slide, please. So using the price to earnings ratio, we can compare if the sector is comparatively expensive. The higher the PE, the more expensive it is, to keep it simple. Now, what I did here is 2 things. I compared valuations historically, or the tech sector now versus its past, and I compared against its peers, which means tech sector versus other sectors. My left chart shows that valuations now are still in line with historical averages. In other words, looking back, the tech valuation today is near the long-term average. On the right-hand side, we see tech versus other sectors now. Yes, tech is slightly more expensive than the average, or even broad global, but it is still attractive versus other sectors right now. So even if tech is more expensive, we think this is justified. And the reason behind this is earnings. Next slide, please. You see, in a COVID-ridden world, equity investing is all about finding where there is growth. And in a growth-starved world, you may actually see tech being one of the best, if not the best bets in investing right now. Not only because their earnings are more resilient, but also perhaps their earnings are growing. Now, why are earnings more resilient? Let's take a step back and just think about it. It's quite simple. A lot of these tech businesses happen in the digital world, not the physical world. They happen in the internet. You see, even when the physical world comes to a halt, tech businesses continue. Ads online continue. Playing games, watching Netflix, using apps continue. And so the earnings of these tech companies are less affected compared to others. Now the next question is, can earnings in a time like this really be growing? We think yes. COVID, lockdown, and the work from home situation actually accelerated adoption of many of the tech themes. Let me grant with a personal example, Santi. In the Philippines, we know that we've been in GCQ for a while, and malls were closed for the longest time. So what I do now is I shop online for my goods. Whether on Shopee or even on those Viber groups I've joined, I now do it online. I'm also scared to go out and eat in restaurants. So I now use Grab Food to deliver food to me. I actually started using mobile banking. And I know compared to other millennials, I might be a little late, but this time really encouraged me to try out mobile banking, and I like it. I do my work meetings via teleconference. In fact, this webinar online, we've actually not only reached more people, but we've actually reached you anywhere, even from your house. And so we hear, and I personally do believe, that consumer behavior has changed forever. How we live our lives has changed forever. And a big part of the change is by integrating more tech into our lives. And so as more of these goods and services in the tech industry become part of our lives, demand increases. As more people want that product, revenue for the companies increases. And so whether we look at earnings growth backwards, as seen on the left chart, or we look at earnings growth 12 months forward, as seen on the right chart, we can see that technology has the highest earnings growth against its peers. And it's significant at that as well. And in a situation like this, we can see not only earnings resilience, but perhaps, especially for some companies, we see earnings growth.
Okay, thanks, David. So now we know that the technology industry is attractive, the valuations are still reasonable, and that there is clearly room for growth. However, we've been looking at the industry as a whole, right? If I'm an investor and I like what I'm hearing from you, what is the best way to look at investing into this industry?
Well, Santi, technology is really a broad and dynamic sector. You can invest as a whole and buy the whole thing, but maybe it might be better to invest by understanding the different subsectors and drivers and using an active yet diversified approach to identify the best opportunities. So on my next slide, I actually show a summary of the main subsectors of tech, as well as the long-term drivers pushing tech forward. Let's start out with the subsectors. There are three main, the first being software and services. To put it simply, imagine the software and apps and games you use on your laptops, phones, tablets, etc. Imagine also all the platforms you use to connect with others, all the memes you check out. Examples of these are the Google, Microsofts, and Facebooks of the world. A characteristic of software and services is that they are usually higher growth companies who rally strongly in up markets, but may also be affected during downturns. With that said, let us move on to tech hardware and equipment and semiconductors, the other two subsectors. These are the more traditional tech, the legacy technology, and they're more defensive in nature. Hardware subsector includes the computer and phone companies. So, these are the Apples and the HPs. For semiconductors, these are the ones used extensively in electronic circuits, and they're crucial parts in making your hardware and supporting your software. So imagine these companies are the Intels and the Qualcomms. So the latter two subsectors are a little more defensive in nature. And by being able to allocate to both high growth but high risk, and alongside maybe a slightly lower growth but less volatility, you get these returns with more managed risk, a diversified approach, which we believe is one of the best ways to investing. Given those three, let us move on to long-term drivers. What is pushing tech forward? Where do we see tech next? And I've listed 8 among many that I think are quite relevant. The first one is the Internet of Things. These are the smart devices that connect to each other via the internet. So your phone connecting to the lamp, connecting to the ref, connecting to your Netflix, connecting to your cars, etc., etc. Next theme is electronic vehicles. These are the Teslas and the self-driving cars that do not operate on oil. Now I want to highlight, when you look at electronic vehicles, don't just think about it in terms of the car. Think about the parts that go into the car, such as semiconductors. These are as high in demand, but not as volatile. The third one is cloud computing. So imagine these are computer systems and storage in the cloud, right? Computing power, you don't have to buy a very expensive laptop. Maybe you can just borrow from the cloud. The fourth is data centers. These are places where you store your computer systems. And as these computer systems become greater in demand, the need for data centers will also be more in demand. The fifth one is AI, and a very interesting topic of that too, artificial intelligence. These are algorithms and machine learning, deep learning. And I think this will continue to grow as well. The next theme is the China tech build-out theme. So we know, and we've been reading, that the Chinese government has actually been pushing to develop the tech infrastructure in China. And as they push for that, demand for that goes up, and companies that are set to invest in the China tech build-out are most likely going to benefit as well. The seventh one, which is a little more personal, is actually gaming. No, not gambling, but more online gaming, e-games. These are the games and game developers on your phone apps, online games, gaming consoles, etc. Now, the interesting about this is gaming has become so big, and most people do not realize it, that in 2019, the prize money for the online gaming competition Fortnite beat even that of Wimbledon. The prize money of the winner was $3 million, more than Wimbledon. And the last one is biotech, which is using technology alongside living systems and organisms for treatment of diseases, which is actually a key sector in the fight against COVID moving forward. And you see the list goes on. These drivers will continue to disrupt our world. And as mentioned earlier, instead of being left behind, why not invest and be a part of that growth?
Thanks for that, David. Definitely agree with you there. So as you mentioned, there are a lot of ways to look at the industry to find value, right? And in reality, technology really is everywhere. All we hear around us are brand names. My iPhone is from Apple, I shop on Amazon, my laptop's from Microsoft. That said, with all these names in the market today, and there are many, how do I know which ones to add to my portfolio?
You know, as part of the MA team, more than just finding the best geographic and sectoral exposure, as I've shown you with tech, we also look at the best fund for the respective sector. After looking at thousands of funds, literally, using both quantitative and qualitative metrics in rigorous due diligence, we actually found the Fidelity Global Technology Fund as the most ideal. They have a strong investment team with sound investment process. They also show good performance. You see, the fund provides a balance. It's a unique approach that provides strong active management, which is vital in such a diverse and dynamic sector. But given regulations and limitations, most Filipino investors cannot access Fidelity directly. And as such, and I mean not to hard sell, but ATRAM really thought of ways to innovate, and we created the ATRAM Global Technology Feeder Fund, which is pretty much a fund that directly invests into Fidelity Global Tech Fund and provides access to any Filipino. Next slide, please. So in summary, the ATRAM Global Technology Feeder Fund is a great fund with strong active management and a rigorous investment process to identify the winners of tomorrow. But to keep it simple, I want you to remember just 3 S's. This is how we do it. Superior performance, small or mid-cap bias, and searching for the winners of tomorrow. I repeat, superior performance, small mid-cap bias, and searching for the winners of tomorrow. You see, it has a proven track record and has delivered outperformance versus the tech benchmark and its peers for the past 5, 7, and 10 years. They also expand the investment universe to invest in small and mid-cap companies to look for the Amazons, Apples, and Facebooks of tomorrow. They also look at those that are potential M&A or mergers and acquisition targets. And lastly, the fund captures the best stock ideas using a growth lens, cyclical lens, or a special situation lens. So to discuss a little further, let us go to superior performance. Next slide, please. Since the inception of the fund, of this dollar fund, it has returned 170%. If you invested 1,000, you would have 2,700 right now, beating the benchmark. Now comparing it to its peers, it has returned 65% more. Superior performance, check. Now let's go on to the second one, the second S, small and mid-cap bias. Next slide, please. With the help of Fidelity's strong research and process, we expand to the mid and small caps that others may not have the capability to cover. The hidden gems, if you wish. We like to find the unicorns of tomorrow, the next Facebook. We think two things make our bias very attractive. First, higher growth potential. These small and mid-cap companies have more room to grow. So why not invest before they hit that S-curve of growth? The second point is they can be targets for mergers and acquisitions. They can be bought. And we know how M&A works. When company A tries to buy company B, he will most likely have to offer a premium. If you held company B, a company being bought, you'll most likely benefit from the premium and make good profits. By doing this, we get to find you the winners of tomorrow, which leads me to my third S, searching for the winners of tomorrow. Next slide, please. Now, I love this slide because it shows a proof of concept. The companies listed on top are the small and mid-cap companies we held in the past. We held LinkedIn, Red Hat, etc. And these companies were actually acquired by the companies below, by Microsoft, IBM, NVIDIA. And what I want to highlight here is the price movement before and after the announcement of acquisitions. Some jumped 9%, some jumped even 82% in such a short time. What I want to highlight is not just how we identify these companies, but how we have successfully done this in different subsectors, whether internet, cloud computing, software, etc. Now, to simplify the framework of how we try to find the winners of tomorrow, let us please go to the next slide. We look at companies using either of three lenses: the growth lens, the cyclical lens, and the special situation lens. The growth lens looks at the long-term winners, and our time horizon usually over 3 years. Some themes include the Internet of Things, cloud computing, e-commerce, and this makes up 50 or more % of the portfolio. The second one is the cyclical lens. We look at the product, we look at idea, we look at the cycles, and what opportunities are present in the different parts of the cycle. An example of this is the rise of electronic vehicles and 5G. These are becoming more popular. Semiconductors are vital in these industries, and so as EV and 5G expand, semiconductors and the demand for them expand. These usually take up less than 30% of the portfolio. The last lens is the specific situation lens, which are company specific. When we see companies trading at discounts, we are sure to capitalize on this. We grab the opportunity and get it. An example of this is IBM, and this usually takes up less than 30% of the portfolio. As you can see, our core approach is really, where is the growth? But more than that, where is there sustainable growth? And then we also understand there are other pockets of opportunities, and so we add cyclical and special situation lenses to identify real value and capitalize on these opportunities. Now, my next slide shows how diversified our tech portfolio is in terms of different themes. We have investments in the cloud, China build-out, e-commerce, 5G, among many other themes. I want to highlight some things about the top 4 that we hold. We think more and more people will be using the cloud and storing and computing there. And so we invest there. You see, we invest during the trend and before it really hits that hyper growth. Next, we think more people will shop online, and this COVID has accelerated that. And so we invested there as well. We think businesses were doing digitalization, which means they're enhancing their digital capabilities to do businesses digitally. And we think again that COVID has actually accelerated this. And so we invested in digitalization theme. And last, and I think we've seen a lot of ads. 5G is coming. It's not here yet, but it's coming. And when it comes, people and companies will be adopting 5G pretty quickly. And when that happens, we will be sure to capitalize on that. And so with all of these trends I have talked about, I can assure you our plan is really simple: to ride these long-term trends and drivers and invest in the best companies at attractive prices. My last slide, the last slide I want to show you is really the top 10 holdings. Next slide, please. So yes, we have the well-known companies like Apple, Samsung, and Alphabet, also known as Google. But we also have the less known companies like Analog Devices and Ceilings Inc. What I want to show you is that we are not limited to just the big hype names. We also look where there is true value. And we are invested in the US, but not just in the US, because I have shown you the global linkages between emerging markets and developed markets. I've shown you that there is value globally, not just in the US. And so we look to places like Korea and Japan and even Europe to find these best opportunities at the right prices for you, our clients. To end, I just want to highlight 3 things. First, I want to highlight how promising the global tech sector is. Second, how now is a good time to enter. And third, how investing with active management, specifically in a very diverse and dynamic sector, is very important. And hopefully, ATRAM, with the ATRAM Global Technology Feeder Fund, can be your best partner in not just not getting left behind by technology, but being a part and owner of all the growth. I hope it helps, Santi.
Definitely, David. Thanks for your insights, for sure. But before we open up the floor to some audience questions, let's get to one of the most common questions out of the way. How can I invest into the product? To help answer that, let me please welcome a representative from one of our sales teams to share the easiest and most convenient way to subscribe and invest into the fund.
Good morning, everyone. So to open an account with ATRAM, you can visit our website, www.atram.com.ph. Here, you can learn more about all the funds we offer, including the Global Technology Fund. But if you have more questions, you may also visit the website's Frequently Asked Questions page or the ATRAM Academy page as well. It will then guide you to our online investment platform, Seedbox. So it's as simple as that. So I hope you do visit our website, www.atram.com.ph. Thank you.
Okay, thank you very much. It's as easy as 3 steps. Okay, now let's open up the floor to a few questions from the audience. Again, you may ask questions throughout the discussion by clicking on the Q&A button on your screen. Please keep them coming. Let's start with one for you, David. We have heard of the big Wirecard issue, obviously in relation to the Philippines and everything. And at one point, this company was one of the golden companies in the financial technology industry. How exposed was the fund? And do you have any views on the situation as well?
Thank you, Santi. To answer you directly, the Global Tech Fund has 0% in Wirecard. You see, Santi brought up a good point that there was a lot of hype behind this. However, even 2 years ago, with our partner with Fidelity, we've identified that Wirecard's growth was questionable and its government wasn't the best. And so even 2 years ago, we felt that it was not a great company to invest in. And I think that highlights the value you see in active management, in strong active management. So yes, 0%.
Okay, thanks for that, David. Another one here. Obviously, investing comes with risks, right? That's not news to any of us. What do you think is the biggest risk involved in investing in global technology?
Hi, Santi. Um, I think one of the biggest risks we're looking at is really US elections. We do diversify globally, but our largest geographic exposure is in the US. And in the US, we can see that there's really a battle between Trump and Biden, in the Democrats and the Republicans. I mean, Republicans for Trump, Democrats, Biden. We think that Biden has said that he will increase tax rates for the global companies, for the US companies. And we think that by increasing the tax rates, earnings, especially for tech companies, might take a hit. However, do we think that moving forward, earnings of tech will be significantly affected? No. Do we think it's still not a great story? No. So although there is the risk that Biden wins and increases taxes, so then decrease earnings for tech, we don't think this is a significant threat to why you should invest in technology.
Okay, thanks, David.
Sure.
So given the high price of technology companies nowadays, do you see a correction in prices anytime soon? And if you do, what do you think would be the potential trigger?
I think you can look at it in different ways. But of course, we want to caveat that to really tell the future is quite impossible. And we can do all the research we want, but how markets react, some's emotional, some is fundamental, and other things. So in my personal view, I think there will be volatility moving forward. But I think there won't be a significant correction as we've seen in the past. We think the worst is over, and that even if, let's say, COVID, and God willing, no, but COVID has another second wave, as I've shown before, tech will probably be more resilient in terms of the downturn and rise faster in terms of the upturn. So again, volatility moving forward will persist, but I think that the correction we saw earlier this year will not happen again in the near future.
It's definitely good news. What currency is the fund? Is it peso or dollar? Very simple. And is the fund the largest global tech product in terms of AUM available in the market today?
Okay. So I want to clarify first that the feeder fund, which is the feeder fund is in peso. So in other words, the ATRAM Global Technology Feeder Fund can be invested with just at least 1,000 pesos. However, as I explained earlier, the ATRAM Global Tech Fund feeds into the Fidelity Global Tech Fund. So the Fidelity Global Tech Fund is about $7 billion in assets under management if you sum it. And that one is in dollar. What's the second question, Santi?
In terms of AUM, is it one of the larger products in the market today?
Got it. At 7 billion, it is definitely one of the upper quartile, but there are other tech funds that are bigger. But again, I want to emphasize that when we look at funds, we don't just look at AUM, we don't just look at the story or the performance, but we look at the investment process. And so even if it may not be the biggest, at $7 billion in AUM, we are more than satisfied with its liquidity and more than happy with its performance.
Okay, great. Going back to the technology side of it, company specific. Facebook actually recently took a hit, right? As a few companies have just decided to stop using Facebook ads. What is the firm's view on this?
Well, Facebook, yes, did take a hit last Friday. However, we think investors are overreacting to the selling. I like to put it in the extremes, right? Assuming you get the top 100 advertisers of Facebook and you sum their contribution to revenues, top 100 Facebook clients, they make up less than 20% of total Facebook revenue. So what's interesting about Facebook is their diversified sources of revenue. And so even if that news came out and markets, we feel overreacted, we think in the long run, Facebook will not really be affected by the news. In fact, after that one day drop, the consecutive 2 days, it posted 2-3% earnings, 2-3% gains.
Okay, thanks, David. I think we can leave it there for this call at this point. So again, just to reiterate, the Global Technology Feeder Fund available on Seedbox. You can go direct to Seedbox or through ATRAM's website. I want to thank David for your very impactful insights and to our audience for all your questions. Before we wrap up, I'd like to remind everyone that a recording of this webinar will be released to all of you, as well as posted on all our social media pages shortly. For more information about ATRAM's funds and strategies, we welcome all of you to visit our website at www.atram.com.ph. As we end this webinar, we will be sending a short survey across to get your valuable feedback to ensure we keep making these updates relevant and useful. You can spend a couple of minutes to complete the survey. We appreciate you taking the time to join us once again. And on behalf of ATRAM, I would like to wish you all the best of luck. Please stay safe and have a great afternoon.
Thank you, everyone. Have a good day.